Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Everybody, welcome to this week's episode of The Lumber Word. I believe it's episode 74. Greg, Matt, welcome back again. We've got another guest, a reoccurring guest, actually. Kyle Litte from Sherwood Lumber, COO of Sherwood Lumber. Glad to have you on, Kyle. We were just chatting about his trip to Italy before we all got back on.
Thank you. Glad to be here.
Thanks for showing up. Appreciate it. I walked into Greg's office, and Matt and I were talking the other day, and Greg's like, get Kyle on. I'm like, yeah, we haven't had Kyle on in a while. I go, I saw him up at Montreal, and we haven't had him on in a while. So we're excited to have you on again, Kyle, to talk about the market. So you guys are going to have to tamper down my bearishness today, because I came in with the full bear jacket on, throwing stuff around the office, and maybe that's a good sign for a market. And Greg just told me to shut up and sell something.
Did I say that? Did I say that?
Yeah, you said it in not those certain terms. That's how I heard it.
Well, that's what I meant.
So let's just real quick.
Is this what I get to say? Stop being a little bitch.
Yeah. you mean?
Come on.
That's
I know you had a birthday yesterday, Ash, but I mean, come on, man. Let's go. Let's go.
Happy birthday, Ash.
Thanks, Kyle. Between that and being the IT guy here, getting Greg's new computer set up, and not having any idea what I'm doing.
Are you 56 or 57 now, Ashley?
56.
Ooh,
56.
You finally made it.
That's a new 45. It's a new 45.
Yeah. So
look at the gun show on Ashley. He's like, oh yeah, I'm 56. Check it out, girls.
Out hard. He came in today.
See these veins popping? Look at my neck.
I went to the gym today. I wore the Schmedium shirt.
No, he's telling me about he's like in this competition with the 20-something-year-olds to do 100 split squats in 5 minutes.
Oh God.
Yeah, and I did not get close. They all talked shit to me, and I said I'll be back Friday and I'll break the record. And they laughed.
I love that.
So lumber, let's talk a little bit about it here. And I'll start out. I was going back and forth on a text today with Stinson, and he had a good point. He's like, what's changed from 8 weeks ago when the market topped? Yes, we've seen some restocking, but 2 weeks of buying actually seems to last 10 weeks. And man, I'm not finding any fault in that. I mean, I'm getting to the point where there was a few announcements came out, which really didn't amount to much. Saw another one the other day that doesn't happen until August. It seems to me yards are checking on shipments, so they obviously don't have on some items a big stockpile like they did. But what's the reason why anybody needs to come in and start changing the way their buying habits have been the last few months until interest rates come down?
I don't think that they will, even if interest rates come down. I think that the customer's strategy of letting people sell them trucks at close to car prices is working. And then if you're talking about yellow pine, you can buy trucks at car prices, or below in some cases. So that style of buying is I guess what I call convenience buying or maintenance buying. It works fine when there's no real penalty to pay and you can get your wood in a timely manner. People's attitudes towards that style of buying changes when curtailments start to pile up. And that's what happened last year about this time. If you think about last May, a bunch of majors were selling 2x4 and better spruce in the mid 300s, and it was unsustainable for them, and they started taking some time off. And then we had a nice little rally in June and July, which was kind of odd. We don't normally get these summer rallies, right? Typically summer is kind of the doldrums. But I remember at the inland last year in mid-July, the mills were ecstatic, and all the traders that were over there were happy because prices had gone up so much in July, and it was all based on these summertime curtailments that had occurred from the Canadians for the most part. This year, I think it's going to be different. I don't think you'll see I don't think it's going to be the spruce that leads the way this year. I feel like the yellow pine is in trouble. And there's just so much 2x4 and 2x6 yellow pine swimming around out there that those guys are going to have to do something, right? I mean, selling 2x4 number 2 and number 1 in the mid to high 200s mil, that doesn't pencil for anyone. So something's going to change. Things that can't happen and go on forever don't. And you can't run your mills if you're losing $6,000 to $10,000 a carload forever.
Greg, Kyle, what do you think about that?
Well,
I mean,
I was happy to have Kyle on today because I feel like I'm like out on a limb. I've over the last couple of weeks, I feel like I've made a call that said, hey, lumber prices are going to be higher. I did go last week, buy. And
yes, you did.
You did.
And, it's a little uncomfortable right now, right? Because it feels like, wow, Greg, you said that, but you don't know what you're talking about because we're not going anywhere.
That's kind of how I kind of felt. I wanted to say that to you today. I'm like, hey, why did you put that out there? Because I think you're wrong.
No, but then that's why I was really happy when we were going to have Kyle, because I knew Kyle was going to back me up on this. And here's the thing. This is the way it should be. If you're going to get a good rally, you need to be uncomfortable with that. You need to question your decision. If you're overconfident about something, that's a recipe for losing money. You know what? I'm very uncomfortable because, I could build a case that we're just going to go sideways and we're just going to churn up money and pay a whole bunch of interest charges. I could build that case, but I'm not going to. I'm going to say buy. Kyle?
I agree with you. I listened to your podcast this morning on my way into work on Spotify, by the way, which is
I love
cool.
It. Ding.
Just to kind of get caught up and seeing what you guys are thinking. But Greg, you're not so far off from where I think right now. And let's face it, historically, I trade from a more bullish or optimistic point of view. However, it's about finding value and looking at opportunity. And if you look at the current structure of the fiber coming out of North America, as well as the fiber coming into North America, the price structure today is unsustainable for these guys to maintain what they're doing. So, yes, the Interfor thing was kind of a wish and the hope. I think we're all looking for another announcement for a wish and a hope. But the fact remains is that supply is going down. It's not going up anytime soon. And in business, as we move forward, is going to get incrementally better. It might not be great, but it's going to get incrementally better. Generally speaking, we came into 2023 with this high level of hope and anticipation of a better marketplace. And I think all of us prepared for that. And right now, or let's say over the last 4 or 5 weeks, we've kind of paid for that. The market had to readjust and get us back into reality. But this move, I believe, is a great opportunity for that reset into what is going to be a long-term recovery cycle, as we move into the latter half of this year and into 2025. So the bottom's in. I agree. In most cases, panels still has some room to go down, but from a lumber perspective, if you look at inflation adjusted numbers, you're below like 2008, 2009. I was back last week and I did a presentation for a regional meeting for the National Framing Council. And the overriding sentiment at that convention was very negative, very negative. And everybody's talking about interest rates. Well, the fact is that we're likely going to be operating in a higher for longer environment. And if interest rates are going to fall in any major capacity, it's going to be based off of tremendous job loss and major changes to the negative in our economy. None of us want that, and that wouldn't be good for anybody in the business. So my message to them was, be careful for what you wish for. You got to learn how to operate in this environment, and in likelihood of interest rates going down slowly, not rapidly, over the next 2 or 3 years. That being said, all of it, taking the contrarian point of view, when everybody moves to this pessimistic, negative mentality, you got to be looking for the next opportunity. And the next opportunity is closer than it is farther away.
Ashley, I can tell you from the mothership here, internally, we've had great success over the last 5 trading days. And I think the worst is behind us in terms of what we sold studs for at one point, what we sold some dimension things for at one point, what I was willing to take for some of my inventory turns or anybody in the company. The worst has come and gone. And now in our meetings, we're discussing raising prices. We're discussing further out shipments. We're discussing customer capitulations on price and tally. Last week I told you that we had a decent trading market going on where we could win one part of the argument and the customer would win the rest of the argument. Well, now we can win two parts of the argument. So there's some incremental change here within the mothership that leads me to agree with Greg. And although I told you guys at the beginning of the year, my prediction for 2024 was that we weren't going to go any higher than about 650, and we'd just be stuck in $150 range all year. And I think that's born to be true so far. That could change. We get a bad summer with wildfires and things like that. I don't really ever trade based on hope or natural disasters. That's not a good strategy. We could go higher, but there's a lot of room to the upside here, considering what we just cleared out in the last 60 days, right? I don't believe that we're going to be in the dreaded flat market situation, Greg, at all, based on what I'm seeing within my own company, based on my 30 years of experience trading, based on the fact that, like, our job as traders is to recognize when value is in front of us and then snatch it, right? Just take it. And our job as traders is to recognize when the market's overbought and sell it, and hedge our inventory. And take orders and clear out space so we can buy more when prices go back down, which we're back down, right? We're here right now. So, if you're really going to be good at this and you really want to operate a tidy business, buy when they want to sell you, which is the last few weeks, and then hold on, because there's going to come a time when the Ryan Miller quote is, when the birds are chirping, feed them. That'll happen here sometime in the next 30 days. And you'll have that wood bought already. So I think you just need to trust your instincts, Greg. I don't think you should feel uncomfortable. I know you do a little bit feel uncomfortable, but I'm with you, dude. Trust me. I'm going to go down with your ship. Okay. If the thing's sinking, we're both going down.
That's called the O'Hare trade.
Well,
yeah.
That's where you buy a whole bunch of lumber and then head to the airport, to O'Hare Airport. And if the price if the price is up by the time you get there, you can go back to the office. If it's not, you jump on a plane anywhere.
Oh, that's funny.
I know, I know that where the place is, it's where, like, every other day I get an email or a call that says, you need to reduce your inventory. You need to reduce your inventory. And, if I'm getting that call, there's other people are getting that call.
Yeah.
And, I'm going to say, I fight to resist that call. I fight that because it's too easy to give in. And the other thing is I look at too, is it's like, hey, what is your inventory position? What is your week's numbers of sales? And Kyle, you're going to back me up again, which is why I love having you. And I do love you a lot, man.
Thanks, man.
Is the volume of business day in and day out. There's liquidity in the marketplace. You can sell as much lumber as you want every single day. Then the challenge is like, well, how much do you want to take every day? What's that price level? And, when I look at it, I go, well, like right now, do I want to have, my bare bones inventory on terms of weeks of supply? Well, no, I don't want to be all in. Some may question, maybe I am, but I'm not.
Right.
But you want to have right now's the time to say, hey, you know what, if at these prices, I'm willing to carry more. The trade-off is, hey, I've got a big interest bill every month, so I need to do things to offset that. My big challenge right now is I look at, hey, the basis, we have May expiring next week. It's a modest premium to the cash market right now. You can roll for $40 1,000. Is $40 1,000 enough for 60 days?
Yes.
Yeah. So, like the thing is that you're no different than everybody else. We all have a big interest bill today. And the general game plan
I like to think that I'm different.
Yeah, right. but the general, what's the game plan that the majority of the guys in the boardroom are going to say? They're going to go less inventory, higher turns, right? So if you're there to go and fill in those gaps as a distributor, you can. There's a living to be made, and you have to recognize that's your value in the supply chain and go out there and execute that plan. We purposely went into 2024 with heavy inventories. We October, November of last year was where we are today in price, basically, if you look from a lumber perspective. So we're like, this is crazy. Why would we not want to move our inventories to 60, 90, maybe 120 days on key items that we know we can increase our selling pace on whenever we choose to do so? And, that's what we do as value buyers. Like, we get paid for having inventory. So why would you not be interested in owning it today at 20% less than you could buy it just 2 months ago? So, and those are the things you got to look at. I know there's questions because we're into the middle of the summer, consumption slows down in certain markets and what have you. So you have to be strategic in where you're going to place that, those dollars and allocate those dollars. But the way it is today, the majority are moving to less inventory, higher turns. The guys that go out there and take a position probably have the best margin opportunity in today's type market.
That's a good
Well,
point.
I'm actually, Kyle, I did load up on inventory in the late fall and winter, like you just talked about. I was kind of slow out of the gate in January and February, so it wasn't like I didn't really see any benefit from that until March. And I'm not probably going to load up as much. I mean, I'm buying some lumber since I came back from being out for 2 weeks, but I'm not buying big, huge chunks of lumber like I would have if this was, say, November, December. But I am buying, significant amount of lumber. If things go down another $50, I will get stung a little bit. But that's what makes us human, dude. I mean, you can't be a good trader if you're not willing to take some losses from time to time. And everybody sitting on this little podcast has taken losses. I mean, to the tune of, I can say I've lost millions of dollars in this business, So it's like, if you can't weather the idea of being wrong, well, then you really just should go work at Walmart or something and be a greeter. Shouldn't be trading lumber.
Ash, we got a diverse listening audience. We've got, financial types. We have retail end users. We've got the trading market. We've got a lot of a big home builder, multifamily segment out there. What's your message to some of those people about the market here?
Well, I liked Kyle's breakdown of when he was at the framing council, and I think we can kind of let's try to meld this message in. So what feedback did you get at the framing council for people in single family, multifamily, and all that? What was their feedback to you? Because that's one of the things we're trying to figure out is where that market's at.
Yeah.
And it felt like the single family people were in a couple weeks ago and then disappeared.
Single family continues to trudge along. I think, general speaking, anybody that's exposed to the national home builders would be the ones that probably have the more challenging time in the market. Here in the Northeast, Mid-Atlantic, where there's more custom home building and what have you, those guys seem to be pretty busy because it's more cash purchases as opposed to mortgage-based purchases and so forth. So it really depends on the market that you're operating in. But from their mindset, the framers were probably the most negative that I've heard in a long time in regard to what they have coming off of this huge order file that they had for 2 to 3 years, and now concerned that they don't have a similar order file going into 2025 as they had in years past. So that was kind of the overriding sentiment I left there. They have enough business to kind of push them through this year. They feel pretty confident of that, but the new commitments are not coming in so quickly, and that's something that concerns them a little bit.
I liked your comment on interest rates. I think we need to prove housing at these rates, right? And I think that for a couple reasons. One, because I agree, I don't think the rates are going lower. I don't know that for a fact. I just don't feel that. And two is like you said, if rates do go lower, we have a whole different kettle of fish there we have to deal with, right? So, and get out of people's mind that are waiting and on the fence of I'm waiting for rates to go down before I commit to something, right? I mean, I think there's a whole group of subset of people that if they realize rates aren't going down, maybe they would jump in and do something, right? The other question I had, I'm jumping as a round. I looked at the BFS report yesterday coming out, and I think they had a little thing on there how repair and remodel was down slightly. This is one thing I have a hard time getting a grasp on. Those numbers get thrown out all over, right? But I see Southern Pine and Treated, and I have to think that some of that is down. And then I read Home Depot and Lowe's, and it sounds like things are steady to slightly up. Kyle, do you have an opinion on repair and remodel at all?
Well, repair and remodel got grossly overcooked in 2021 and 22. So, and you had the big fall off in late 22 into 23, and I think we've overcorrected to the downside. Today, there's more equity in homes than there ever has been. Nobody's moving because interest rates are so high. The work from home environment today, even though it's less than what we had 2 or 3 years ago, is still more than double what we've historically had in the last 25 years. So people are going to be in their home for longer. They're going to go out and make it nice. They have more money to spend in that to make it nicer. Repair and remodel is going to start moving back towards its historical growth. And a lot of people don't realize it, but repair and remodel, the majority of the lumber used, in North America sits in repair and remodel. It's like 35 or more percent goes there, and sometimes pushes 40%. So of all the consumption here, of the 60 billion board feet consumed in the United States, that's a lot of lumber. I don't think you're going to see the real effects of that until we get into more certainty with what's going to happen with the election and what have you into the next year. But it does feel like repair and remodel is getting a little bit better. Like we said in so many cases today, the worst is behind us with that overcorrection last year. I suspect you'll start to see some growth in the box store usages here over the next, let's say, few quarters. I just sent you a chart just to put it in perspective. You're asking the value of lumber. I used a chart from Dustin Jalbert at Fast Markets, one of your previous guests.
Yeah.
In that presentation that I did last week, just to put in perspective of where we are from an inflation adjusted perspective in the price of lumber. It's extremely low. This is only lumber. It doesn't include panel products.
I'm just taking a look at it right now.
Yeah. Hey, Matt, on repair and model, you guys get a pretty good look at that. What are your guys saying? Are you seeing premium lumber available in excess, or are they pulling that, or what's going?
There's a handful of studs that pop up, every week or two, which is not abnormal. And it's really just kind of gone like clockwork this year. They predicted flat this year, and so far they've been right on their prediction. They predicted growth last year, and they were right about that too. So I just believe what they tell us. And flat for us is fine because I can't even go there. But I'll just tell you this: it blows like what Kyle said. It blows your mind how much lumber these guys go through, and how much of that lumber never even makes it to the open market. It's just it's interesting that there's that big of a consumption of lumber that people don't even think about.
Question, Matt, and maybe Kyle and Greg on this one. I was talking to somebody the other day, and they brought up the question: are some of these big boxes starting to steal some of this pro business and some of this other repair and remodel business that historically went to other people? I know some of them are setting up great big distributions and they're in test phase, but they carry a pretty big hammer if they ever wanted to do something or try to buy their way into it, if that makes sense.
Well, that's what's happening. It's happening right now as we speak. So,
but you're not selling them non-premium lumber, are you?
It's not. I have nothing to do with it, first of all, and I don't know that it's really changed what we're shipping them.
Okay.
We're really involved in that side of the business per se. All of our stuff is the historical stuff we've always done for them. There's nothing new.
Okay.
But I know that they're talking about building these super centers where you can just drive a semi truck in there. They'll load you up with your order, and then you just go about your way.
I think there's a handful of them built.
Direct competition with our actual pro use yards.
Yeah.
So
I think there's 3 or 4 markets that they've tested it here in the United States, and there's 1 or 2 in Canada as well. And they just bought another avenue in order to get into the pro dealer side. I mean, Home Depot, if you really think about it, this is like their second attempt at it. They had HD Supply, spun at the White Cap, and they're going. I mean, it's going to be. I suspect that they're going to continue to push this along. Obviously, with the most recent investment that they had, but I don't know, if we'll see the real effect of that for quite some time yet. It's still early stages. Who knows? I mean, but let's go back to repair and remodel and single family and multifamily. I truly believe, and this is just my theory, the only reason that we saw lumber go to 4 digits is because of repair and remodel. Because it wasn't because housing starts moved to 1.8 million starts or what have you. It was in combination with repair and remodel going to extraordinary high because we had everyone and their brother at home building a deck or redoing a kitchen or a bathroom or all of these things. And so when you ask, does Home Depot or Lowe's steal market share from the pro dealer? Yeah, because they had supply. If the pro dealer couldn't get it from his local lumber yard, he went and bought it from that avenue. So ultimately, I think the COVID rally was really a repair and remodel story more so than a single family or a multi. You can combine multifamily. Multifamily went to a crazy number after.
It was also a hoarding rally, and the things that happened. People that had contract wood mills would just say, "Yeah, put it on to contract for 3 weeks from now, 4 weeks from now, 5 weeks from now, whatever." Took that lumber all away from the market. Or the people that said, "Hey, I'm not going to run out. I'm gonna buy." And people would talk to me during that time. Is there a shortage of lumber? No, there was no shortage of lumber. You could buy anything you wanted if you were willing to pay the price. And we allocated supply based on price. We're in a situation now where, as we talked about, people are figuring out, how do I increase turns? How do I do the same amount of business with less wood? Because they're not afraid of higher prices. And we're also in a place where it's basic. An object at motion tends to stay at motion, and an object at rest tends to stay at rest. As we bottom out here, it's going to be hard. We're going to need some sort of catalyst to really move, because you get flat prices like this. And like what happened over the last couple of weeks is guys they sell enough lumber where normally they'd raise their price. They tried to raise their price. They couldn't get it. And so now they're kind of back at the price.
That was very scientifical, Greg, throwing that the law of thermodynamics or whatever that is, or
the theory of relativity. Theory of relativity.
Hey, you guys pay attention to like financial results of the producers, the publicly traded ones?
Yes.
Yeah, West Fraser had their best quarter ever.
Did you see?
But it was all in panel products.
I'm joking.
There was I won't name the name, but there's a major out there who is at a new 200-day below the 200-day moving average as of this morning. I got a little email notification. To me, that kind of stuff puts pressure on boardrooms to make decisions that need to be made, and that's the kind of high level stuff that I don't. I'm not going to go into that meeting, but somebody higher than me is going to. They're going to have to answer for it. Why is our stock price at below a 200-day moving average? And so that's corporate America, or corporate Canada in this case. And I feel like we're going to start seeing more of these announcements. I'm sure of it. I'm not guessing here. I'm 100% positive that's going to happen. Just a matter of how it happens and when. We're already seeing it out here in the West with some of these mills. Like I told you, I talked about C&D, a 130-year-old timber company. They just packed up and took their money and run, like why would they want to give back that money? So some of the mills like Hampton, we didn't buy a bunch of expensive yellow pine mills. So, we're going to be fine. Now, do we want to run at, 350 mil? No, trust me.
No,
we don't want to run at 350 mil, whether it's green Doug fir, dry hem fir, dry Doug fir, or spruce. Thank God we don't have yellow pine mills running at 250. I'm sure glad that I'm not that guy right now.
Yeah.
But somebody is, right? Somebody is, and somebody would have to answer for that. And they're going to have to make some hard decisions here. And it's happening as we speak. Whether we're even aware of it is just, we'll find out when it happens, right?
Wonder if they'll ask them in the boardroom why they didn't hedge.
I don't know, because they didn't talk to your pig farmer buddy from last week.
So what do you think, guys? Mary Day dump? Let's do it.
Real quick. Just all of us are in the future trade lumber futures. When I say trade them, we hook them up. We look for value, and we use that as part of our daily business, right? Open interest is over 10,000 right now. There's a big chunk of industry. Shouldn't say big chunk. There's
Industry's long and funds are short.
Yes. When does that change? Because the resounding theme I hear from everybody when I read emails every day from people, like, the funds have got to come out of their short position, and that's going to drive the market higher. What?
The thing I find interesting about that, Ash, is with the industry long, how much of that can really be forward pricing? Because if we've talked about it, we know multifamily's down 38% year to date. Kyle's saying, hey, these guys, there's not as much business out there. Cash is so much cheaper. Everything that you would forward price is lower than you can, is not a good basis to the board. So who are all the industry longs in the board? Who are they?
I don't know.
But I go back. I'm a hedger. Like I'm long in the board today, but it's against a sale that I took that I am obligated to deliver to a customer down the road. So the interesting thing is, yes, the industry's long, but if you look at the net base, they're net long. Like there's a fair amount of industry shorts sitting in there too. So
Sure.
it's not like yeah, right. Yeah, so I guess and by the way, me too.
Yeah, there you go.
But I mean,
how do you find that when you have one hand here
Kyle,
and one hand there, Kyle? How does that,
Carl is a professional trader. He's a trader. He's long and short at the same time, and he can explain it.
We used to have long esoteric discussions about like how can you be long and short. Ash, remember those?
But you literally, I mean, at other places you have to be, because each one is a separate transaction, right? I mean, you can blend them and you can cross hedge them and all that, but I mean, there's a theory out there that this is the bucket for your forward sales. This is the bucket for your hedge,
right?
And that's how you manage them.
We have tens of millions of feet that we don't turn in 30 days. So that to me is at risk to the market, and therefore we need to go out there and understand what's our upside potential, what's our downside potential, what's the basis in the board, and if we should offset that with that insurance policy. So that's why we're long and short at the same time.
Absolutely. And it allows us to keep wood on the ground and go home at night too, right? I mean, I think you could see if everybody starts really realizing the CME contract, the value it has, you could see open interest 20, 30, 40, 50,000 over the next 2 years. And I hope it goes there.
So let's go back to hedging 101. And Greg said this in your podcast last week. Every mill should be thankful if they have to lose money on their hedge, right? The same goes true on the forward book. If I lose money on my forward hedge, that it's from a margin perspective, it's always better because I can buy the spot market better than what print says. Yep. So like in every case, you want to lose money on your insurance policy because you know you're going to make more money on your real cash trade. And that's, or the majority of your business, I should say. And that's something that's really, for whatever reason, lumbermen really struggle with it. And
totally struggle.
They really struggle with it. They're like, I don't understand. Like, I should be making money on both sides. How can I have this negative account and blah, 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 blah. You know, like
I get that call all the time.
The farmers understand it completely. Like I have mutual friends or similar friends that are mainly corn, and they offset their input and output every year based off of it.
Especially with the price of input costs now, before you even realize any profits at these farms.
Yep.
Yeah, I mean, that might be the difference. If you're a farmer, that might be the difference for you having to sell your farm to the bank or not, right?
Yeah.
Like seriously, these farmers are operating on razor thin margins, and so is the lumber business for that matter.
Well, let's jump into Mary Day Kill, but before Mary Day Dump, sorry.
What did you say?
Ashley, are we having some psychological issues? You know, sound like Jonah Hill.
We're going to bleep that one. But I wanted to ask Kyle, since Greg, Matt, and I don't trade in the panel arena. What's going on with panels in the last 30 days?
Well, I think you're finding one new supply coming to the market that wasn't there the previous 30 days, and that has offset the equilibrium in the market or the lack of supply that pushed us to the high prices that we've seen over the last 90 days. So whether it's been Brazilian pine plywood re-entering the market, or some import OSB re-entering the market that wasn't there, that has now provided other opportunities for customers to go out there and meet their needs outside of maybe what was already contracted and so forth. So we just got just like anything, you get overcooked in one direction, you need to go out there and correct to another. I think we talked about it maybe a little bit pre-call in the plywood business. We might see, I believe there's a heavy short position in the plywood business, or I should say the structural panel business. So I wouldn't be surprised if we see some sort of short covering rally in, let's say, the next 10 business days. Whether or not that puts in a firm bottom or not, yet to be determined. But it does feel like there's a lot of guys that had made commitments on lumber over the last few weeks, maybe even a couple months, that didn't make it on panels, and now that panel stuff is going to possibly get covered here as we get more towards value.
That's a great point, because we were all thinking the opposite on here. We were thinking if panels eased up, then people would buy more lumber.
Yeah. Yeah, it could be a combination of both.
Too.
Yeah, it might be a
Hey,
combination
Kyle, I
of
have a
both.
question about your guys' business in the Northeast, or even just anywhere you operate, sort of in the northern tier of the states. Has weather been a problem for you guys this year?
Yeah, I mean, it has been in so many ways, but I'd say it's been more of a problem in the Mid-Atlantic and South. The Northeast has been what we would seasonably see on a pretty typical first quarter or first third of the year. What has been good for us is that our distribution business is, from a volume perspective, it's good. Like, we might not like the price, we might not like the margin, but the takeaway is there consistently. And the fact that, if we look at volume year over year, we grew in 2024 versus 2023 in the same period. So that we're excited about that. That means that people one, recognize what our value is in the supply chain, and two, we also recognize that people are buying smaller quantities and turning their inventory quicker. So
Right.
it provides us an opportunity that maybe some others don't have.
Great point, Kyle and Matt and Greg. I mean, Greg, you said what is our message to the people listening? Well, if you buy lumber, people like us at Hampton, Sherwood, or Sitka, we're going to take the risk and have wood on the ground so you can get it just in time, right? And get it quickly. And I think that's probably going to be the theme for the rest of the year. So we're looking forward to feeling very uncomfortable so we can support everybody out there, if that makes sense. All right, I'll jump in with Mary, Date, and Dump right first. Greg, I always feel strange going first because I don't want to steal any of your thunder on it. So if you want to flip a coin and go, or I can go first.
No, go ahead, Ash. I'm trying to plug my laptop in. It says I'm running out of juice. So
okay. So my Mary is and this is, I got a caveat to both of these: MSR spruce and 2x4 Southern Yellow Pine 1 and 2. Two opposing things, but only with a hedge on. Only with a hedge. The reason I like the MSR is all of a sudden all the lists with MSR spruce on them in the last few weeks has disappeared. We're starting to get a lot more inquiry, and this is the right time of the year for it. Date 2x4 104 and 5/8 sold off hard, and I think they're going to come back a little bit, and they're going to have and I'm looking to marry those in the next 2 weeks. Dump, I don't really have much out there I want to dump right now. Like, I'll go back to Matt's fallback is anything that I've got that's been sitting around longer than 2 or 3 months that isn't moving. I want to dump that and clean up the deck so I can put some new stuff on the ground. Kyle, how about you? Any?
Yeah, I don't know that your list is much different than mine. I have very much liked MSR, particularly of the values that we've been able to purchase the last 2 weeks, which is at or very, very close,
it's 2 and better.
The same as 2 and better prices for 2,100, which has been very, very good. I like 2x4 16s. They've moved from that overvalued state to now an undervalued state, and relative to everything else, I think those will come back. And there might be some. I guess I would probably put a date on those right now as opposed to Mary. As far as dump goes, we're in very similar fashion to you. Like, anything that we have that's sitting in our portfolio that's in the aged category, we want to turn that and look for another opportunity to replenish. But generally speaking, we've looked at our inventories and said, let's keep them at a manageable position, and let's look for the next opportunity to build. And that's what we're looking for, those values today. That's about all I have on that.
Appreciate it. Matt, Greg?
Greg likes to go cleanup, so I'll go.
Okay.
I want to marry 2x4 and 2x6 16s, 2 and better or higher grade at the prices I've been able to buy them here in the last week or two. In some cases, I've been buying them at the number 3 price. So when it comes to whitewood or spruce or hemlock or any, I guess, spruce whitewood type species, I'm not talking about Doug fir or yellow pine. I'm just talking about my business. I want to own 2x4 and 2x6 16s. I want to marry those. I don't want to be hedging them. I just want to own them. And then the stuff that I want to date, I'm kind of dating 2x6 random. 2x6 random is starting to make a move for the first time in 60 days. I sold some 2x6 random into the Midwest for more than 2x4. I had been selling that stuff for $40 less than 2x4 here. Not too far recently. Greg, hint, hint. But we've been able to get the prices up on 2x6 random, and I hadn't seen that trade for a while where 2x6 had gone a little bit above 2x4. So that to me is a sign. I like it's a positive sign. And then as far as dumping goes, I mean, I always want to dump 2x4 8-foot number 3. Anybody want to call me on that? Yeah, I'm your Huckleberry. Just call me. I got about 10 trucks. I'll sell them to you right now for dirt cheap.
Where do you got those down in Texas?
Use them as fence trails. Yeah, I'll sell them to you for like $370, and you can slap some paint on them and then use them as fence rails. But I don't really want to dump much other than just the shrapnel in my inventory that I always talk about. That's part of being a good inventory manager too. If you're going to do this job, you got to bite the bullet and write down some things and just move on and, rinse and repeat. Hopefully you can make enough money on the good links where you can offset the losses on the bad links.
Greg, you're up.
Yeah, well, I mean, as you highlighted, some trades that we have on, they're like boat anchor trades right now. Basis isn't working for us, but, it's like every month that I get to roll at $30, $40, $1,000, that eases that pain of the basis not working. And, basis is going to work on these items, that's for sure. Like I said earlier, I'm out on a limb, about the market 6, 8, 10 weeks from now. It's going to be higher than it is today, but it's going to be a slow grind. But, I've got a new, I'm not going to say I'm married yet because I'm just trying to try her out right now and we've talked about it on the show, 2x4 yellow pine, number 1 and number 2, putting some stuff together with that, going to send it into the warehouse, keep it high and dry. I'm thinking come, July, August, that's going to work out. Stay tuned. Well, we regularly update people on what happens with our trades, good and bad. We don't, we're very transparent here at the Lumber Word, sometimes to a fault, I think.
Yeah. Don't tell everybody everything. Remember?
Matt, do I hold anything back? Come on.
Kyle, man, thanks for coming on today.
It's like the guy that called Ashley. He goes, God, the thing I love about Greg is he doesn't give up.
They did say that too. But
my favorite
is that guy gets me. That guy gets me.
I get you, Greg, and that's why I love you. But hey, the best one was when the guy came up to you and told you, "Hey, you're telling people too much."
Yeah. Yeah. Oh, right. We got to keep that information to ourselves. Yeah.
Let's not help anyone ever.
I wanted to thank Kyle for coming on. Look, every time you're on, Kyle, we're a lot better off for it. So we appreciate it.
I am too. Thank you.
We're all lucky that we have some pretty cool friends in this business, and I don't really know you personally, Kyle, but I sure like having you on the show. You're fun.
Thank you so much. Yeah, I really respect what you guys are doing. Obviously, really enjoy hanging out with you, whether it's 2D or 3D. So I'll make sure that we get together 3D sometime.
Awesome.
All right.
Hey, Kyle, make sure you say hi to Loebner for me.
I definitely will.
I owe him a call, so I'll have to reach out to him.
Thanks, cool. Kyle.
Thanks,
all right,
guys.
See you guys. Have a good day.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.